Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. In this video, I'm gonna show you something that is rare. Most traders don't know about this, and it's something that if you wanna be a successful trader, you should know about this. Okay, before I continue to the main purpose of this video, if this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to a network so that YouTube pushes to a level of audience, and try to take advantage of our made for you services, which are either enroll for our courses or you make an investment for account management, or you subscribe for our VIP signals. So right now, the topic we shall be discussing is pricing trading strategy as opposed to candlestick technical analysis in forex synthetic market. So what does this topic really mean? Okay, now what I'm trying to explain here is that doing technical analysis is not the only stuff that can actually help you succeed as a trader, because when you are doing technical analysis, you're actually doing geometry. You're actually performing geometrical analysis, and when you are performing geometrical analysis, you are faced with a lot of algebra and calculus-based problems that will give you a lot of human errors. We discussed about error recently, or maybe beforehand. I should have uploaded an error analysis video. So there are a lot of errors. There are a lot of probabilistical and statistical error in the forex synthetic market. And if you are just focusing on the geometrical analysis, which is technical analysis, whereby you are drawing trend lines, drawing resistance support, drawing ellipse, drawing circles, drawing rectangle, drawing boxes, whereby you are using moving averages, you are using indicators, all of these have a lot of errors. Okay, so we now move from technical analysis to pricing trading strategy analysis. Take for instance, I own a business, and the business is more of physical products. This is my business location. For instance, this is my business location, and we deal in distribution. Let's say we are wholesalers. We are wholesaler of mobile device. Okay, we are wholesaler of mobile device. Let's say the brand we focus is on iPhones. Okay, we focus on iPhone and Apple laptop. Okay, this is what we actually focus on. Wholesaling. We do the wholesale. Now, let's say this session represents our clients or customers, or what you can call buyers. We are the sellers. These are buyers. Okay, buyers, and we are just single entity. We are just like this selling is, I don't know how to put it. We are wholesalers, right? We sell at some cheap price. Right? Like we sell it cheap to these buyers because we actually bought directly from manufacturer. So let's represent this as manufacturer. Okay, let's represent this as manufacturer. So the manufacturer of iPhone and Apple laptop, they actually bought material, raw material from another extractive, let's represent it with E, extractive industry. They actually bought those raw, they might bought those raw material at they should have bought, they bought it at a very cheap price, or they just have access to it for free based on politics or government. Now, so we have pricing criteria, we have prices. Okay, so you now as an observer, as a trader, so this place will represent these buyers, these consumers, or we cannot call it consumer, but these people that are buyers will be represented as trader. Though as a trader you can also sell. Yes, you can. If you buy something, you can resell it depending on what you want, because each time you buy, you want to make profit when the price go up, and each time you sell, you want to make profit each time the price go down. But in a physical world, when you sell something at a point in time, you have already believed that if I sell this thing, I have already bought it at a low price, so let me sell it so that I make profit. That is the belief. And if you sold something and you want to get that thing back, you want to buy it. You sold your phone, so you want to get another phone, so you have to buy it. Now, as a trader, you are buying this phone with hope that you want to buy it at such cheap price, so that if you are selling it, you sell it at a high price. So as a buyer, your belief, your psychology is that price will go up, and as a seller, your psychology is that price will go down, so that you have to sell these things before price goes down. Because if price goes down, if you sell it, you will lose, because you will sell it at a very low price that you cannot be able to buy the same product when the price is going up. Okay, so that is what we call pricing trading strategy. Okay, now extractive industry send products to manufacturers. They manufacture the iPhone and Apple laptop and then send it to wholesalers. Now the wholesalers will send it to buyers, and these buyers can be different calibers of buyers, those that want to be retail distributors, or those that want to be retail retail sellers. Okay, so we have ranges of price. Okay, now we have low price. Okay, let's delete this. Okay, so we have low price. So this low price we have the extractive industry, ES, and then we have medium price. This medium price are manufacturers. Okay, and then we have we're not going to call it a high price, but let's call it let's call it medium. It's still within medium price. We have a medium price here, but then this is called second order medium price, right? Let's call it second order medium price, and this is the wholesalers, WH. Okay, and then we cannot have high price. This will be retailers and distributors, DS, and then we will now have very high price. Okay, VH. We will now have retailers. Okay, retailers. Ask yourself a question: are you actually trading? Which type of trader are you? How do you see price movement? How do you don't consider the geometry. See, if if an object is set in motion, okay, you can actually draw the geometry of the motion, but that geometry of the motion is not what controls the motion. You are actually drawing, you are drawing what has already happened in metaphysical world. You are just drawing it because it has happened. That is not the right way to actually analyze markets. That's why you need to join our VIP. You need to subscribe to our VIP. You need to subscribe for our mentorship. You need to subscribe for our courses for you to go far, simply because we use high-level supersonic, like metaphysical pricing strategy to actually validate a signal. Okay, that's one thing you have to know. So which type of trader are you? Are you the trader that is actually analyzing market based on geometry? Yes, those geometry actually will help you for you to actually go far if you actually add pricing pattern. If you actually deploy pricing strategy, it will help you to go far. But there are different type of pricing. There are different type of pricing strategy. There are different type of, which I'm not going to talking about in this video. But the truth is that you have to ask yourself a question: which type of trader are you? Are you at an extractive level? Are you at distributive level? Are you at wholesale level? Are you at wholesale level? Are you at distributive level? Are you at retail level? Okay. Now, any of these entity can still buy and sell. Yes, once you're a trader, you buy, sell, buy, sell, buy, sell. But the question is, what is your motive of buying? If you cannot define the motive of buying and motive of selling, then you will be a failure. You don't want to buy this market at a price where when you buy it at this price, you cannot be able to sell it and still buy more. If, take for instance, I deal in iPhone as I'm a wholesaler. So I'm a wholesaler and I deal in iPhones and laptop as I have used in the example. And then one iPhone, let me use iPhone as an example, is like the cost of producing it from the manufacturer is $100. This is the cost of production from the manufacturer. So because I'm buying as a wholesaler, they reduce the price for me by, let's say, because I'm a wholesaler and I'm buying in bulk, they actually reduce the price for me. They give me discount and then they reduce the price by $10 and say I should buy it at $90. Okay. Now, I'm a wholesaler. I bought this at $90. Then my duty as a wholesaler is to monitor the manufacturers and extractive industry and see when there will be scarcity of resources, so that, or there will be surplus of resources, so that, because if there is deficiencies, like if the raw extractive industry have issue, it either make price go higher or lower with respect to production, without respect to producers. Now, which type of trader are you? Do you actually meditate? Do you think about players in the market who are more powerful than you? You should depend on something. A wholesaler depends on extractive industry and a manufacturing or producing industry. If manufacturing industry and extractive industry collapse, or if one of them collapse, the wholesale industry will automatically collapse. So before you make trades, make sure you have the right pricing strategy. I'm not going to explain this pricing strategy, but I'm going to end this video and see you on my VIP for consistent profit making. Bye for now.